Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Pashurdiz. Israel's long-expected ground offensive into the Gaza Strip got underway over the weekend, raising the stakes in an ever-escalating conflict that is increasingly turning into a long, drawn-out war. Gold shot higher on Friday, even as calls for a ceasefire gathered pace. Israel's delay in mounting ground incursions into Gaza had raised hopes of a possible truce, but it seems that many traders were anticipating some kind of an intensification of Israel's military response to Hamas's attacks on October 7th. However, even though the war has now entered a more dangerous second phase, it hasn't been followed up by significant risk aversion in the markets. Gold prices scaled a more than 5-month high on Friday, but pulled back below $2,000 on Monday. Oil futures also edged lower today after spiking higher on Friday. Another reason for the unusual calm in the markets is that traders are possibly distracted by even bigger events that are on the agenda this week. The Fed is due to announce its latest policy decision on Wednesday, followed by the Bank of England on Thursday, although the real highlight will likely be the Bank of Japan's announcement on Tuesday. Speculation has been building in the run-up to the BOJ's meeting that the policymakers will further adjust their controversial yield curve control policy amid Japanese government bond yields joining in the global rally. Yet Japanese yields haven't been able to keep a pace with U.S. yields, pressuring the yen, which last week brushed a one-year low of 150.77 per dollar. It didn't take long for the greenback's advance to stumble, however, likely due to fears of an imminent intervention by the Japanese authorities to prop up the yen. There seems to have been a bit of a relief that there was no upside surprise in the core PCE reading, and this may have also weighed on the US dollar on Friday, even though personal consumption continued to grow at a robust pace. The Fed is not expected to announce any changes in policy on Wednesday, nor is Powell anticipated to alter his language much on the rates outlook. The 10-year Treasury yield has come off 16-year highs above 5.0%, but remains elevated around 4.85%, keeping equities on the back foot. Thanks for watching today's market comment here at XM.com.